Yo, sup, Kish?
Sorry. Stalking on mute.
Nah, that's all good.
Morning again, guys. So, automatic bearish bias. I haven't looked at the M5 as yet, but this alone is saying, well, two things really. Like I was saying in the chat, my the perfectionist in me is saying that we still need to touch this level. But I think that's silly because there's nothing significant about that level. So I'm looking at. I wanted to see the old rejection block down here do something to take the market into either premium or into the buy side. We got buy side run into premium. It stopped there. There was liquidity pool resting up here, well above here. They accumulated that beautifully. I got a small short in here. As a matter of fact, I could probably talk about that. Yeah. So if you've seen the call today, like Thursday, if you saw the call we did Wednesday, Tuesday, then this liquidity pool up here should be familiar. The accumulation from the day before. So I was looking to see them take it above that. Once that happened, big up candle here. Literally, this is all I did. Liquidity pool is taken of a big candle followed by a big down candle. I mark this candle as low. That's my decision point. I want to sell when they close below here. They close below it here. I sold into this, anticipating them to close below here, print um that PDRA here. So that candle's high right there. I was going to sell again here, but it didn't give me anything, and M1 kind of ran away. So I took the bulk of the position off at overnight session high, and then there's a bullish version of this inside here. Big expansion, find the high. First low above it right there. And I took the rest off right there. So this is how my day ended, right? We did nothing to get back above here, which is why I'm not seeing a reason for them to want to do that. And I'm more on the bearish side of the market today. Let me put ONS on. We did some crazy things. Where was it? This is it. Was this the one we did? No, this is the one we did. So, um, yeah, I'm bearish on the day. It's 8:16. I haven't identified exactly where I want to go short from as yet. So that's what I'm doing now. What about you? What did you do yesterday? Yesterday was kind of, so this was the actual analysis. I was trading on this template after 11
Yesterday, I
Yeah,
cooked until about 9, and then I caught. Let me see
yeah,
if I can annotate.
yeah.
Entered like this, tap into that down candle right there, and M5, and then I rode this up
hmm
somewhere into like this level.
Yep, yeah. I saw that move as well. I mean, at the start of the day, I wanted to see it go higher because it only makes sense for it to go higher.
Yeah,
Um, Started off with a run on oil and slow. I took some losses here, and then I couldn't identify exactly where this wanted to go, but on M1, there was a lot of stuff inside here. I even participated in something that looked like a breaker. Pretty sure it's not a breaker. I like what it looked like. So we had all the liquidity run, then up candle here, big FEG through here, second FEG, so breakaway gap, fair value gap. Just went along here. Maybe it's luck, but that one played out pretty nicely. So, as it relates to going short today, where can I go short? Still early. Why does this not have 50% on? Okay. That should fix it. All right. So I'm not going to force this idea on you, but if you have been looking at it, you should see some reaction around the 50% level of here and the 50% level of here. If you have been playing around with it. If you haven't, then there's something you could incorporate. We're sitting at that right now. So this is essentially average price of buying. So I'm not looking to sell here, but I want to see them push up a little from there, and then I sell. It's also overlapping with 4M open at 50% level. So I want to see what equities open does. But yeah, on the day I'm bearish. I just need an entry now. It's been a beautiful experience. Glad they helped. I always find that the realignment I need is always in my journal. Hence my post yesterday. So we have 10 minutes until I feel like I want to do anything in terms of entry. If you have any questions, now is a good time to knock them out of the park. Or if you're not bearish, if you're bullish and you want to clash analysis, feel free to. Yeah. It might be later because I have to take the missus to your appointment, but definitely it will be uploaded today. I might take the PC with me. I'm not going to sit and do nothing. That's like
Sounds like a very interesting day for you.
yeah, drop off and then probably head to a Starbucks.
Got a Croc store in the area?
If only. It's funny that you say that. I think I'm due one now. April, May, June. It's been 5 months since I got a new Crocs. Let's see. So waiting. I like just watching it now. I'm thinking I want to see if they wick the low first before going higher, or they leave the low and then push up, because that makes it a short-term target for me. Something to put partials or take partials at. While I'm looking at the long book here, I am a little bit antsy about that buy, but I'm not going to touch it. Want this to move higher so I can sell. If the morning session, let me be clear, if the morning session just starts pumping, I go back to waiting to short this. This is the perfection element. Beautiful hit, close all loops, and then die. But the data this morning kind of pumped it lower. PMI. Yeah. No, PMI is on 9. Unemployment claims. So unemployment claims came in above. Job openings came in above. Trey, I think we were talking when we talked about what the job numbers are likely going to look like. Remember?
Yeah.
Yeah. Everything is now good. Air quotes.
Quote
Good job.
unquote.
They have to make it look good now because they've been raising rates for too long. And the reaction to the cut has been a little bit insignificant. And then it's not a political call, but I think fear and greed is heavy in the market this week for 2 reasons. One, the job numbers should make persons want to buy. Full stop. If the economy looks good, the economy looks good. And if the economy looks good, you put your money in the economy. So the job numbers should want persons buying or should let people feel comfortable buying. But then there's war brewing. In the wartime, you want to keep cash or you want to keep assets because, you don't get not much opportunities come up in wartime to invest in.
Yeah.
Yes. So fear and greed should be heavy in the market. And that's why yesterday I was hesitant to trade on it. So when I said that I don't expect anything to be tradable, I don't mean that we can't look and find setups. It just means that I don't feel comfortable enough to sit with an audience and trade because I expect the market to be up and down, up and down, up and down. And
Yeah, it's not like high probability pretty much.
yeah, it could get emotional.
Mm-hmm. Extra stop on saw that.
Not even the extra stop one, just make this just look weird in general. And it was yesterday was an up and down wild day. So hopefully I saved anybody who trusted me enough to just chill. And if you didn't, I hope you didn't get chopped up. Bam, bam, bam. Four more minutes for this to move. Nothing to do until then. So while I'm not going to take this buy for this is what it would look like on pure curiosity. I want to put it about 10 points below here, so that's 96.86. Therefore, I am not in this trade because I have a bearish bias, but because of where the market is. If I was going to consider a long, at minimum, it would be here. At EQ, I don't want to just cut the risk, and if it's a BE, it's a BE. Let me just watch to see if it plays out. With 0 risk on the table. Fly me to the moon. Let's check if this M1 delivery is inefficient out of sheer curiosity. There are some lower highs inside here, but nothing that would make me confident in buys. Expansion standpoint, already expanded away from here, expanded away from here. Your value is in here. My first thought now is a wick. I want to short a wick back into here. Take the risk on that. So let's see in a minute.
Battery 70%.
You know what I should do? I should know where 50% of this messy range is. That is 1936-ish.
Yeah, Angel. No, 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 no.
All right, here's equities open. Need it a little bit higher before I feel comfortable selling, or I needed to really break out of here. I look at retracements. I don't like trading right at this level here. Ugh. Hurry up, wrap up. Either wrap up this or something.
Love when they do this. Just sit right below your TP and just play with your emotions.
All right, Nice. So now it's premium run. Waiting for this M5 to close before I make a decision. But yeah, this is what I expect. Some push back into premium and then a short. Let's see how far up this M5 goes first. Been a while, Obaki, been a while.
That's Ryan Reynolds. What do you mean?
Oh man. Okay, so now I'd like the M1 beside me. Because I want to start stocking my shorts now. Can get this off. G. Right. So make sure I don't jump the gun. Let me anticipate a beating range being created here. So I try to keep my entry above here. Scotty went long. You going for ONS high, Scotty? Okay.
It's coming for your stops.
I'm not in yet. That's what I'm saying. I'm using this to prevent myself from being a eager beaver.
Yeah. I'm gonna say he's coming, he's right there, you know. You better make sure.
Yeah. I guess this is what experience teaches you. You know, having a trade idea and entry protocols isn't enough. Sometimes you have to address the human element, the part of you that just wants to push buttons because you can. That's what I'm doing with this. I know if I go short anywhere inside here, I can hurt myself. Allow that to do what it wants to do. Put the line here. That's for scaling in.
And are you targeting like ONS low or not ONS low, but low of the day or like low of the week?
Low of the day for now, because there's news at 9 o'clock.
Yeah.
That news is that's big news. So this is going to keep me in check from trying to. If it does not close below here, I will not short any retracements. If it closes below here, I'll short the retracement. No, 9 o'clock feels scary now. You look at it. If it fails to take ONS high, just stays there, like stays when this FEG ONS high. That's scary stuff. Because then we're essentially going to be in the middle. And then news can pam pam, whiplash.
On this run up, what would be your expansion candle? Because I would think it'd be that fourth candle on
One,
M1.
2, 3, 4. This one here?
Yeah.
Yeah.
Okay.
Breakaway gap, and it's FEG. And I'm fully aware that this is pushing higher. That's why I'm keeping myself flat until I see any evidence that this is actually trying to be breaking, like trying to break low and closing below down candles.
Yeah.
So at the end of all this run up, because of down candle, okay, trigger point. Close below there if you want me to do something. If not, I'll be here. A part of me, like, I don't know about you, a part of me likes when a trade idea feels like a little bit risky and you have a filter like this. Like, I don't want to trade it unless we close below here. And it just stays there. Something about it feels comforting.
I know what you're talking about.
Yeah. So this is where I don't want to sell, but I didn't push the button. Doesn't feel right. He rejected the FEG. I know what that means. So it doesn't feel right. You put a line on for when it's high because somehow indicator is not printed on the M1. Patiently waiting.
Not this time, Scotty.
Almost there. I think the daily chart has a decent enough bearish structure. So we should get lots of runs lower. Just Scotty TP coming up. All right. Now let's get ready to rumble. So now I have my trigger point. Give me a CSD and I will, if I get a CSD here, I'll short and sit in the trade and wait for it to close below here and expand. So that's my entry criteria right now. CSD, I go short, stop at the high, and then wait. If I wasn't up for that risk, I just wait for it to close, wait for FEG here, short. But sometimes you have to play a setup enough to trust some elements of it. As a matter of fact, I mean, even looking here for an entry criteria right at the high would be fine. But M5 is a big candle. So gotta be careful.
Morning, Kish.
Hey,
Question for you. Would you consider the 315 from yesterday, being that just close to that, if we do close above here at ONS high? Or would you just short it at after CSD?
short at CSD.
Short of CSD here?
Yeah. The only buy side objective above me that I can see is two things. One, the level that I think was perfection for the run on buy side, and ONS
Yeah.
high. I'm
Okay.
not sticking to perfection for this delivery. So I'm using ONS high to filter what I want to see. So now ONS high taken. I just want CSD and I'm short. Close below here again, and I want it to be fast.
Back territory.
Back to at least EQ of the range.
Yeah, closing below that is back territory, correct?
Right.
Okay.
So
Cool,
if
cool.
we are what's that word now? Micro analyzing this candle low should be the same thing that initiates the expansion low like this. Close below this, wicks up, take it. Perfection. Closing below this also takes this low. So you get the CSD and the confirmation, and they sell into the high of the next candle. So just as a little watch this. I'm gonna tag this low. In a perfect world, the candle that closes below here also takes this low. And then you just automatically sell the next candle's high. Once it opens and pushes up, you sell. So you can actually know when you should be aggressive or when you can be aggressive and when you can take extra risk. Outside of that, you don't think, why is the setup not playing out? You look at, are the triggers anything that tells me that I can push? FYI, selling here is just ballsy. Like, just
Yeah, I'm gonna tap it before, but then I was like, nah, wait, oh wait.
That's what it is. This is not skill or analysis. This is just ballsy.
I mean, it would be a beautiful short with that tap.
Screenshot.
Oh boy, look at that.
That's what they get you, man. That's what they get you.
Microscopic mode, man. That's the way to do it right now. Get your 10-15, you get out.
Yeah, I know somebody that does that daily. All right, cool. So now we have, it looks like this candle is going to give us everything we want. The close
Okay.
below here, plus taking this low. So I'm automatically thinking I'm selling into the high of the next candle when we open and push up, as long as the conditions are met. Three, two, one. Okay, when we open, trade up. I'm going short, so I'm short. Framing the setup looks like that. Stop above the high. And wherever ONS EQ is where I want to think about managing. It's over here. Bam.
Ish.
Hey.
Um, for overnight session, right?
Mhm.
Would you just isolate the fact that its ONS high would be the highest candle within that 4 to 8:15 range, or would we look at the structure inside of overnight session and say that the high you marked out would be regarded as the stop hunt high almost, and the high before that was the real high in overnight session? Or do you just filter it straight to the highest candle inside of overnight session as a whole, just like a
So,
blank?
for simplicity, I just keep it as the highest candle inside the range. There are going to be days where things like this happen where you know this is a stop hunt and you want to modify. I'm not going to say that's a bad idea, but there are simpler ways to trade than trying to be perfect. So
So
it
can you still reference it the same,
your discretion.
basically?
Huh?
Okay. So I said, so it's basically you say discretion, but you also say keeping it simple, we can still engage with it still being order block above stop lines, etc. Even though we're just saying it's eight, basically just overnight session high, like keeping it simple like that.
Indeed. So why I'm saying that is it's silly for me to look at this and say, hey, this is not the high and this is a stop hunt. You know, we know that. But
Yeah.
how does that change how you engage? I still want to see the high take in CSD and in lower prices.
Would it change the way you grade it looking on a lower time frame based off the fact that it is overnight session high, but an FEG above it would be more likely or more keen for you to see directionally, because an FEG printed above it would be specifically a breakaway gap? Or
Yeah, you can do that, and
Okay.
you can go as far as to say, all right, there are ideal setups and then there are setups that are okay. In an ideal setup, I'll take more risk. In a not ideal setup, I will cut the risk type of thing. Just don't go
Okay.
telling yourself that you shouldn't look at the high or anything like that. Just grade it in terms of how you react and don't force it to not put a wick at the high, stuff like that.
And then secondly, what would be your current points of invalidation for bullish or bearish with how price is currently trading?
A new M5 high closing higher. That's a no-no. No bueno. That's not good. All the context here for this going lower is on the M5. M1 is just messy right now, but all the context for going lower is on M5. I don't want to see them back below here before 9 o'clock because that's too much risk to be taken if we're this close to the high and 9 o'clock. So 8 minutes, you know, by the close of this M5 candle, I want to see us below the arrow again. This M5 candle closes and we're still above the arrow. I can wait. I'm still going to go short, but I'll remove that risk of being hunted at the data release. I'm not crazy. I want to short. I really want to be short to expand lower, but I'm not crazy like that. But
So would you, yes, you were saying?
No, so far I'm comfortable with what this is doing. I expected speed after this is taken. That's not taken, so I'm already in. Can't micro analyze it.
So would you filter it down to a set time before the news release to basically say, okay, if before this news release comes out at 9, within the next 5 minutes, if nothing is clear, I'm gonna close my trade? Or is it purely, would you just base it off of structure and then the time leading up to it? Or
So
is there some fixed rule you use?
I'm using the fact that the context is taken from the time frame. So I need candles on this time frame to be closing in alignment with the trade. So this is an M5 chart. And then this looks like it's about to stop me. That's fine by me because I'm not going to hold it going into the data release. So after the data release, still going to look for a short. But as of right now, there's nothing to do. As long as the M5, these M5 candles don't close above here, after the data release, I'll still look for a short. M5 closes above, and I don't. All right, so this M5 has closed above here. Stay flat until after data release. Too much risk to be trying to get a position now, and that volatility can whiplash.
Hey, Kish, I got a question.
Mhm.
Based on midnight, 'cause that's all that I trade for structure. Like that's my entire framework.
Mhm.
Looking at this on the M5, this is our expansion candle, close above. But rules say we wait for a down candle after we close above this expansion.
Mhm.
Can I use this down candle as kind of like a early confirmation per se for entries like this?
But then this would have been before we get the confirmation.
Yeah, that's what I'm saying. Is that like an early confirmation?
You would need something else, in my opinion, something to have you thinking that this is overwhelmingly bullish. So let's say liquidity pool not taken and we're expanding and you can see a reason for it to continue going up. That's something you can trust. I'd rather get the confirmation first then look for the setup, then I enter. You don't want to force. So what you don't want to force is the entry point when the direction has not been confirmed. That's why you don't.
Okay. That makes sense.
Is it because the short didn't play out? Why you're considering that?
No, I don't want to say this, but I may or may not have taken liquidity. But
Oh, no worries. All good, all good, all good.
because I've just seen this a lot where even though it isn't the rule, it will still play out.
Mhm.
Basically, just anticipating this to be your quote unquote order block in the expansion.
Okay. I mean, if that works, then that's your model.
Yeah.
And if you've been using it, then you're good. Patiently waiting. Place your bets higher or lower on the news.
I say lower now.
I like a whiplash higher than lower.
Normal procedure. Data releases and whiplashes are like best friends. Yeah, I think they went to school together.
2 peas in a pod.
All right, what did the data say? That's good. That's good data. So now let's see how the market reacts to it. M5. Show me something I can work with. That's the whiplash. That's it. That looks like a whiplash.
Kish, are you still writing the book?
Which one?
Um, the
One for my
old,
kids.
the one you, excuse me?
One for my kids.
Yeah. Are you
Yeah.
still writing it?
Yeah. It's got a whole lot of psychology.
So, if, for example, I were to do something similar, right?
Mhm.
Like, okay, what's your thought process going into giving them that book, or like the premise behind the book?
So it's about how you the mindset that you should have going into trading and while you're in trading. So it doesn't start off with, even though I have written technical chapters or technical pages, I haven't put them a part of what I'm doing yet. So it's for now, it's all about how to think, basically. But it's hard to explain that. But so far, the bulk majority of what's in the book is how to think. When you look at information, how do you interpret it? When you interpret it, how do you use it to make a decision? How do you see something and say, no? For example, remember today I said that my idea of perfect buy side was them reaching here, but I'm going to discard the idea of a perfect delivery solely on the fact that there's nothing liquidity based above that they should, in my opinion, could reach for. Because of that, I didn't go long. I took a loss on a short, and now look at this. I ditched perfection, and market is delivering perfectly. How do you think in instances like that? How do you, let's say you did that and you took a loss. How do you manage your mind? There's a lot of trading is psychology. You have to know yourself. You have to be strong, for lack of a better word. So yeah, that's
So the
what.
key topics in the book. So like if you were to say like, so obviously you've been helping everybody for like 2-3 years. Is there like certain things that you see like majority of traders are struggling with specifically from a psychology standpoint or
Always,
mindset?
always.
What would that be?
It's not one thing. It depends on the person. Some persons, I don't think some persons understand what trading is, and because of that, your expectation, not just coming in, but even after being a part of trading for a year or even a couple months, it's not aligned with what the market is. So you can't grow. If I've ever met traders who have been trading for years, but they can't answer certain questions, and they can't tell you that, these mistakes that I used to make, I don't make them anymore, and this is why. That's the hallmark of a trader who doesn't know what they should be doing. And I mean, there's nothing wrong with that. Everybody preaches pattern trading and all that. So you don't really get time to sit and say to yourself, but I have seen this pattern, I have read this book, I have watched that video, but something is off with my execution. And you don't blame yourself. You say, okay, clearly I'm not doing anything wrong because I'm using the information. So what am I doing that's not right? And then that just leads you. Some traders still think that with all the information that they have and their execution is not lining up, it's because information is missing. It's because you don't know how to use the information. Yes, you know what a PD array is, or a structure or something, but if you don't see it in the market, how do you think when you look at the chart and you're bullish and you don't see a bullish order block? What do you think when you're bullish and you look at the market and you can't see sell side liquidity for them to take? Those are the areas that I think if persons focused on more, they'd realize that it's not executing and trading that's wrong. It's just how I'm interpreting the information. You could even use this data, for example, or the trade idea I took this morning. Bearish bias. I explained why. I didn't think perfect delivery was going to print. This is exactly perfect delivery. Now it's moving lower. Am I going to try to trade every other perfect delivery I see? Of course not. I'm not silly. I'm still going to look at what frames when one side of the market is higher probability. What do I do when it gets to a certain level? Nothing is going to change. A loss or a losing trade doesn't change how you think about the market. You don't stop using order blocks because one order block failed. That's just it's trading. So I think that's the biggest thing I've seen with traders. not spending enough time alone, or not journaling what's on your mind. So you have a problem today, you journal, next week you look at it, you're like, you know, that problem, I actually figured out the answer a couple days after. Or I still haven't figured out this. There's nothing to do today. Let me see if I can find information. Let me see if I can look at the charts to try to figure out the things that you don't know. Sometimes all it needs is really just to look and say, but this doesn't make any sense. And that's it. Similarly, I am of the belief we're going to close lower. That's my plan is to short. I didn't short the exact draw on liquidity because this was very fast. I'm now looking at something. Give me something here and I will go short. Same premise. Big FEG here, trade below, wake up, we close below this, I'm selling the open of the next candle. Just like that. How you interpret information doesn't change. What changes is how you use what you see at a particular time. Like this big,
Yeah.
no, go ahead.
No, you can finish speaking.
I was going to say, generally, when you have liquidity pull around and then they pull back and they run the liquidity again, usually the move away from here is fast. This is when you can take risk, in my opinion. If you frame an idea and it stays, then it runs it fast. Fade it. So 16 seconds, I'm 99% sure I'm going to sell the next candle. I'm not going to put excessive risk on it. I'm selling it because I expect the move away from here below this to be fast. There.
If you were to read this delivery, right, from the time we started expanding, where's this annotate function? If you were to like start reading the delivery from like when we started expanding out of here, what would EO have told you through this? Or how would your EO engagement be through this delivery until this point? So like the different EOs that form, does it tell you anything? Or
there's a very important thing that for me would not have been looking at EO there, and I'll tell you why. When you look at the chart, you don't use like an order block alone to justify that this is bullish. Because if you do that, how do you know when an order block should fail? I came to the market with a bearish bias. That bearish bias had me discrediting everything that was bullish.
Yeah.
That comment alone will tell you why nothing here in hindsight will make sense to me, or will even if I can see that, okay, there was a high, there was a low taken, it's not going to change the fact that the directional premise I saw here is like I'm not going to say it's wrong because I didn't get a trade here. If you do that, you'll never grow after years. You'll keep repeating the same mistakes. Some mistakes, you make them and they mean nothing because you follow the rules. Some mistakes, you make them and you know that, okay, I did something wrong. 100%, I don't think I did anything wrong here. I framed what I wanted to see. I waited. So nothing in hindsight validates that. Similarly, a moment ago, I mentioned that if they accumulate like this below a point, then they run it fast. This move is fast. I sold into this without hesitating. You have to grow as a trader, and sometimes growing means taking it on the chin. That's it. have to take it on the chin sometimes. You can't be that person. I don't think this has any reason to be bullish, but I can't push it down. It ran up. I got a short. This short, it wasn't as heavy in terms of size as these, but this has already made back everything I lost here plus more. I didn't hesitate. I didn't talk down to myself. I didn't say I did something. You can't do that, or you get 20 years of experience, but it's just the same thing over and over again. You can't be that type of trader. In my opinion, you can't do that. Follow the rules. Right now, my focus is this arrow. I'm shaving as a matter of fact because I'm not crazy. This arrow. And I can tell you from now, when it closes below this black line right here, if a FVG prints here, I'm going to sell it again. This is going to be trailing profit. The risk on this will not exceed that because I'm not crazy. And that's that. It's trading. It's not, I don't know, something else. I'm considering selling this. This is 2 FVGs. I'm looking at this as the breakaway gap, perfectly formed. So I'm looking at a rejection of this. Second FVG in the expansion leg. It's a big one. Put 50% on. Why am I putting 50% on? Because it's pretty? No, because I want something to keep me from thinking, just sell it because it's retracing. That's silly. I want something here that says, if you're going to sell this, factor this into your decisions. I'm going to factor in whether they're trying to close above this 50% level or not. These are the things that make you grow. It doesn't matter if you lose a trade, you can grow from bad experience. I don't think this is a Jamaican saying, but there's a popular saying that says the same water that softens the potato hardens the egg. Somebody took a loss here and it ruined their entire day. Maybe not somebody on the call. Somebody took a loss this morning and then it's falling now and they're just spiraling out of control. No, I'm not doing that. If anything, I am very, very happy that the perfect delivery I framed, exactly where it should turn, exactly where it should head to, played out. What if I was a perfectionist and I came this morning and I thought that it has to go here, and I bought and it toyed. I closed or I got tagged break even and it ran. I wouldn't be doing anything still. I would have grown from the fact that I was able to identify where it's going. I was able to get something and that's it. So why am I going to let this phase me? So now it's hit 50%. I want to see something here that prints as bearish. If it prints a down candle, when it closes below the low, I want to sell a retracement. If it does not close below here, I let this stay break even. I'm already partial and unfazed. Because if this prints any other day in this fashion, I'm going to do the same thing. Same exact thing. I like the M5. So this FVG is pretty, but something about this one, I'll put something else on for context. This one looks better because we have one big candle printing FVG and one big candle filling it. I think BPR. I want to sell this right now. 100%, I want to sell this right now after seeing it hit this. But I don't have an entry fractal. This by itself is not an entry fractal. If this falls, I'm not going to feel like, oh man, I should have sold it. No. I want a down candle, and I'll sell it when they close below it. If this candle takes this low and it pulls back up, I will consider this as a CSD because all the context around it. We have BPR, FE, everything. You have to grow from everything you do in trading. or you repeat the same thing. 10 years of trading, 5 years of trading, 20 years of trading. You look at the chart, it's printing a big up candle. Oh my God, you get excited. Why? Because it's a big green candle and I want to buy. Is it expanding? Is it moving away from a level? Is liquidity below you? You don't know any of these things. So I hope you don't take that, as me talking down to you or anything. You can't let, it doesn't matter what you see in hindsight. Hindsight is only good if you can see the market print based on a particular rule in hindsight. I don't see that here. The rule was, the expectation was lower prices. Everything I have on my analysis here is still valid to me. Everything. Until 11 o'clock, everything here is still valid. What time is it? 9:20, 9:19. I'm watching to see if they close below here because this is a rejection. So this is the start of an expansion. For visual purposes, I want to see it close below that. If it closes, I want to sell above the open of the next candle. Simple. 4, 3, 2, 1. Open, wick up, and see if I don't sell it. Rinse and repeat the rules. Rinse and repeat the rules. No.
Looks like they're gonna leave the hat on that one.
I wanted to trade back above the open.
Oh,
I wanted to trade back above.
get it on
this-
futures.
Don't do that. I mean, if it does, then it's fine. I already have an entry in and it's doing pretty well, but yeah, so I like that. Too slow. So, all right, perfect example again. See, I just missed exactly what I wanted to sell this. If this fractal prints again anywhere, you think I'm going to be afraid to sell it? I'm not going to be afraid to sell it. I just don't want to chase price. I mean, I could always size down and still take it above these candles opens, but I just feel like that's bad behavior, personally. Yeah. It comes back to this. I should really be using that. I'm going to sell it again if it does that. If it runs away, I'm going to look for an FVG side here. I'm going to partake. The only thing stops me, let's be realistic. The only thing stops me from executing an FVG here is if the M5 is wicky when it gets there and it's not bodies. That I don't like. That I don't. No bueno. That I don't like. You want to microanalyze, you can always pull the levels over. This is not microanalysis, in my humble opinion. This is watching to see if the levels get reclaimed. That's what this is. Right, I'm gonna trim a little at this FEG because I'm not crazy. I don't want it to reject and ruin my really good morning. There we go. So that was a beautiful short. Absolutely beautiful. Tell me that somebody was with me.
You already
Can't take
know.
loss. Good. You can't take the losses and then, sit back and watch me win, because then that's silly, in my opinion. Lose together, we win together. Then we chill. So if I say I'm trimming here and I explain why, I'm not trimming because I'm scared. You should pay attention to the reasons behind. I think that's one of the things I like about me. Nothing has changed with me since the day I started trading. I still have every intention. I still try to the best of my ability to show you everything that I wanted to know to be like this. I explain my whys. I don't say enter at this price, stop at that price, and just leave it like that. Though many persons would want that. But no. How do you grow from that? You have just think about it like this, to put it simple. If you're doing the same thing over and over, right? How do you gauge if you're growing? PNL is not enough. PNL, what if, all right, let's say you have a child that's old enough to be intuitive, and he or she says to you, Daddy, what are you doing? And say, oh, I'm trading, this is trading, etc., etc., etc. And they ask you a couple of questions, you answer, you're good. 2 years later, hey, Daddy, you still trading? Yeah, okay. What are you doing? You're buying or selling? And I'm looking to buy because da 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 da. Okay. Maybe you've been teaching them for the last couple of years and they ask you questions. If you can't answer questions like that, then that's how you know that you've been slacking. That's how I look at it. So anytime you're trading, try to grow. It's not just about winning. Winning is beautiful, but you can lose and still learn stuff.
You learn more by losing.
Huh?
You learn more by losing.
True. I hear that a lot. But what I don't hear is I lost a trade and it was because I let's say, I don't know. Okay. How would I assess myself here? If I had to report to like a psychologist every day and it was like, Kishan, I saw that you took a loss today. You made it back, but what happened here? Do you think I'd go, the risk was managed and all that? No, they don't want to know that. They can already see that on their end. Why did you lose? And here's the funny part about why persons hide their losses is because they don't feel comfortable in their response in telling somebody why they lost. Why did you lose this trade? I lost this trade because I entered when I was supposed to, and I didn't get the reaction I wanted. That's why I lost. I didn't lose this trade because the market ran higher, and that's a bad thing. Market's not a villain for going higher. That's all. I lost this trade because I got what I wanted to enter, but then the market, it didn't follow through. Similarly, when I wanted to sell here, I know exactly what I wanted. I didn't follow through. The market's not a villain for not giving me enough time to get in the trade. It's crazy, man. It's crazy.
Sometimes Nas be playing though.
Right.
Over that.
we know that. Sometimes NASDAQ feels like it's trying to get you psychologically involved in it. Look at this, right? Like if you never hear a conversation like this again, since the start of the day in the chart, I can't see no reason for this to go higher. None at all. Perfection, I think I posted that exact thing. The perfectionist in me says that this is exactly where it needs to go. And that's based on my analysis from yesterday. Rejection block, premium, inside premium. This is a PD array inside premium. But this FVG is encompassing all of that. And we run its high. For that reason, I don't see a reason to go back above here. So, lower time frames. What's the drawn liquidity now? This sell side, in my opinion. This sell side is a drawn liquidity. If it gets to the rejection block and it's rejecting, I might break even, I'm chill. Or I cut the trade. trade right there. But as far as I can see, there's nothing left inside this that's inefficient. Nothing. They should be reaching here. M5. When it's low, wick, pump the high. I expected that run up. I didn't expect a glorious run up like this. Took a loss. Made it back. One step closer to that 100 mil I need.
You say 100 mil?
Nah,
Come
nah, nah.
again?
Like 600K.
Trey is lying to us. I heard it also. He said it way too quickly to be hesitating. That was so just rolled off the tongue.
So if you remember, if you were here last year, I told you that 2024 is the year I wanted to really push myself. But I didn't start off the year on, despite my analysis being correct, I didn't capitalize on my analysis. It was messy at the start of the year. I thought we were going to trade lower, dip below the open, I buy below the open, I hold for this glorious run and life would be good. But at the start of the year, they kept going up, going up, going up. So I took quite a lot of losses trying to swing short. Okay. Fortunately, I had a very good conversation, very enlightening conversation with a psychologist or performance coach. And, you know, he kind of told me what I'm telling you. Don't let the losses disregard the fact that for the last 5 years, you've been focused on honing your skills. And that's what I did. So now I want to see, in case I haven't said this, elections generally spike this market. The job numbers that they're fluffing up, all of that is suggesting this market should be rallying. We are in deep premium. Everything here should be a run to set up a discount market for the election. Keep that in mind. I might not have time to repeat it again, so at least you have it. Entertain the idea that they're going to take this market lower. How many persons are long right now at break even without partials? Getting cooked. Not Scotty though.
So my question to you is, why didn't you change your bias even when we weren't showing any signs of going lower?
So there are times when I want to flip bias, and this is how I flip a bias. If the market is between buy side objective, sell side objective, and it gets to the sell side objective and it prints something, I'll consider it. Okay? But in real time, and this is something that you'll experience on your own, in real time, this candle can wick here, then it pulls back and then it crashes. This is overnight session. We can drop here, take the high, and then crash. All of those scenarios are perfectly feasible. So I can't be bearish here, then bullish here, then it drops, and I'm like, why did I change my bias? And that's happened to me before. Likely happened to everybody else. So whenever I'm going to flip a bias, there has to be specific points. When the call started and I pointed to the little long setup somewhere inside here, the TP was right here, despite me saying this is perfect delivery. So there's the information and then there's how you execute on it. I'm not going to flip a bias between here and here when I'm bearish and these levels are logical for it to trade to before going low. Similarly, I'm not going to just sell this because it's something and then tell all of this big green candle to stop. I don't have that power. I don't have that. So you have to, there has to be a thin line, and nothing anybody says to you can create this for you. It can only guide you to creating it for yourself. There has to be a thin line to when you say, there's nothing I will do here because of this, versus the moment this happens, I'm going to do that. There has to be that line. For me, an understanding of expansion, like spend some time with expansion, how they start, where they start. Find liquidity pools, ignore the run to the liquidity pool. Look what happened the first time it touched the liquidity pool. The first time we closed, the first time we wick. Watch the delivery afterwards and then look at it in hindsight. Okay, it hit the liquidity pool here for the first time, and we close above and we rally like crazy. Okay. If I see the market print this at a liquidity pool, it should mean continuation. Or it hits the liquidity pool like this, then it does this. If I'd gone short here, I would have suffered a little bit of drawdown and then it would have moved. Okay. In hindsight, what characteristic or signature happened here that could have told me no? Accumulate right below liquidity. We run the buy side level one more time. It's going to drop fast. Yesterday, M5 yesterday, or even M1 yesterday. Let me. Yesterday we were looking at and I say we very loosely. Yesterday we understood that the liquidity pool was resting right above this accumulation window. We understood that, which means we know if we run the liquidity here, we're expecting order block, rejection block, because we don't want to see it go through. If you've never said that to yourself, intuitively, that's what you're thinking. The liquidity pool gets taken, I want an order block or a rejection block. Cool. We didn't whip the liquidity pool from it to entertain any rejection block setups. We printed a down candle. Inside the down candle, we had immediate rejection, meaning big up candle, big down candle. If this expansion is starting, we're going to close below this down candle and it's going to run fast. Simple. On an M1 inside here, so that's let's use this. I don't know, something in how I coded this indicator doesn't allow for it to print on M1. It's an error that maybe I'll fix sometime. But what I want yesterday, here's the liquidity pool. I think the M5 candle low was this right here. It looks a little different on my feed, but nonetheless, it was this candle's low. I think. Whichever candle, right? Just you can look at that on your own. Watch this drop. When this rallied like that, higher, fast, and swept right here, I expected a fast move. I was going to pile on in here, but I just didn't. I expected this to move away fast. So using this as an example, liquidity pool, it gets taken, we accumulate, this went lower instead. If it goes up fast, anticipate it's going to take some internal, then run away quickly. The more you understand that, the more you're able to build a framework around it. You get two expansions afterwards, automatically we know you're going to sell the open of this candle right there. This probably would have been too fast without a limit. You ran away. Identify the draw and try to get in. Same thing with this right here. That's why in advance, I was saying, I'm going to sell the next candle open right here. Because I saw that it ran up quickly. This is M1 and it has wicks. So on a second chart, it's probably consecutive up candles. I'm selling the moment this candle closes and I'm expecting them to sweep this with a body. This FEG right here, liquidity, taken, close below, breakaway gap. Same thing we're expecting down here. But the M5, that's why I was saying the M5 is the context for this. Because everything I want to see to support direction is on M5. M5 closing below here, M5 sweep, we haven't gotten that. And this wasn't ideal. When I was drawing this line, I was trying to say that I shouldn't put the line here. I should put it at the open of this and use this to this as the FEG, since I want to sell above this point and not above this high. Nonetheless, it's good. But yeah, I'm holding this short to the low of the H1 range. I think this is where we're drawn to. I have no reason to close. I've trimmed twice. No emotions. It's 938. Internal high run. Breakaway gap. FEG. Mark this low. Here's your sell side. We wick. We close. The first candle high. So if this candle closes, your FEG goes from here to the high of this candle. So in a real time, this is your FEG. When the candle closes, you can actually take it off or modify it. But you want the first candle high below here. You frame that, look for a short. So I'll stay until 9:45 and then I'll start getting ready to go be a human being. Straighten this. This high is no longer there, but no longer below that. Your FEG is not there. This is automatically saying it might not move right now, even if we're bearish. It might not be bearish at all. We don't know. But you need a candle high below here. So instinctively, you're thinking it. If a candle high should be below here, and this is what it looks like, if the market trades up, there needs to be a fast run. Put a high down here. I'm not saying sell into this because we don't have confirmation yet. What I'm saying is, if you get that high below here, don't be afraid. I'll stay until 9:45 to see if I can get one more short in. This is overnight session high, I believe. We're digging into. MT4 on my next screen is showing me. Now we have a big expansion now. Now I feel confident that FV is going to form. 5 seconds. 4, 3, 2, 1. Next candle high. All this is not fair value. You can watch it in real time or wait for the candle to close. Okay. That's fair value now. It's not a fair value gap. It's fair value.
You can call that the black pool, probably.
You're gonna get me shot. I saw something about indigo, something weird like that. I don't remember what it was, but I think I saw him mention something. I'm like, what's wrong with this guy? Word on the street is he blew the Robbins account.
I don't even have any words for that guy anymore.
Kish.
Hey,
So, sometime back, you always spoke about one of the best studies we should do was like an FEG study, right?
Yep.
So, I've spent majority of my time on like the FEG stuff, and it's a whole nother level. But what I wanted to ask is, do you see this FEG you marked out over there and this one over here, right? So if we go on like an M1's delivery, right? So as much as we were anticipating like we wanted quick delivery to go through it, and then how we can grade this retracement back up into the FEG on a lower time frame, well, let's say M1, this leg prints in so many, I'm not even annotated. This leg prints in so many different ways on like an M1. Well, there's like a handful of ways that you can really narrow it down to how these print. So would you advise me on that in any way? Because sometimes like what I've noticed is if we print, so like this, for example, this FEG, this first one here, they engineer a low roundabout at equilibrium so that when this massive candle falls over there, we can already anticipate and grade how high this wick needs to come up because they engineer like a breakaway gap 9 times out of 10 because of that low. that they put in the FEG, opposed to this, whereas on an M1, it was literally just down candles bodies, which
Mhm.
could warrant that the retracement backup can be a lot higher because there's no stop ons, or we can't even identify the nearest stop ons in that leg, opposed to that first one. Would you say that there's anything else I'm missing in grading the process like that, or things that I should just keep my eye out to if I'm looking at an M5 FEG, and then how the M1 printed inside of that FEG we marked out, to just give me a little bit of like telltale signs? Or is there anything else that you would say about that?
Okay, so you're probably one of the guys that were here with me for some time. So now I'm glad that you remember what I said about FEGs. If you're going to study FEGs, you can't just be studying them because it's 3 candles. You have to work with specific definitions.
Yeah.
The first definition that you need, right? And I take great pride in reminding everybody that I figured out breakaway gaps before ICT taught it. You have to look at how it was created and how it was
Yeah.
filled. That's the
Yeah.
most important thing. So if you're looking at this FEG, like you mentioned, this is what you're doing. One candle created it, one candle filled it. By definition, that becomes a BPR.
Okay.
If it's a BPR, you don't want to see, well, it depends on your bias. If it's a BPR and you're bearish, you want to see price stay below that 50% level. Right?
Yep. Yes.
A regular FEG, just a regular 3 candle in the middle of nowhere, then you need context as to where is it? Where is this FEG and why is it important? In hindsight, we could say this traded back into here. I'm not going to say that, oh yeah, that's beautiful. No, I'm not doing that. That's crazy. The 50% here overlapping with that FEG would make this FEG important. So where it is and how it's printed is way more important than just saying it's 3 candles, it's FEG, da da da. No. Or you'll never get to fully understand when you can say it should be filled, it shouldn't be filled, or anticipated. Where were we anticipating? I'm anticipating. I'm anticipating an FEG here to sell. But remember what I said. The only thing that makes me not want to sell this FEG is if the M5 is wicky. Remember that? That's context and framework. Context, I want to see this trade lower to that sell side pool. If that's going to happen, breakaway gap should not be open. We should crush them, retrace, and then die. I low-key want to sell this here for some strange reason. But nonetheless, you need that context. You need that context. No, I'm even though I didn't sell this, I'm glad to see that this did not get respected, because this is not telling me that I should be stalking a short because of where it is. It's a M1 FEG, beautiful. M5 is the context here. Crush it, M5. It's wicky. It's wicky. I don't want to sell that. It doesn't mean it's not a breakaway gap or something has changed. It's not matching the context. Similarly, when we're watching up here, we want it to break away below here, like this. Beautiful. Why? Because we hit the buy side objective, we run it a second time. So anybody who tried to go in early, that run up, ear quotes, scare them out. They're waiting for it to close above the buy retracement. Take this. This is taking all of that away from them. I just realized that this was a really beautiful trade now that I'm looking at numbers. That's over 100 points. But yeah, I'm personally not going to do anything else here. The only thing that kept me on the call was the idea that I could sell again if they close below here, but that's not happening. I wanted to sell right here in fair value. After this close, It did not happen. I'm gonna go be a, you know, be knight in shining armor. But like I said, I'm gonna take the laptop with me. Take the screen extender if I happen to find a Starbucks after I drop the missus off. I'm happy hopping on a call. If I get Wi-Fi, then we can hop on a call. So Wabaki, I want to hop on that call with you today, but I need to get going because it's quite the drive back to Kingston. But I have your number. I message you. And everybody else, I'll see you in the group. If you don't see the recording posted immediately, it's because I'm out of office and I might not have strong Wi-Fi to upload it. So enjoy the rest of your day. Don't do anything I wouldn't. And you have all the levels I have on my chart. So that's it for me today.
Behave yourself with that hair appointment. You only got a couple more millions to go, you know.
But yeah.
Is the Dubai trip still on, by the way? Or was that a joke?
Huh?
Is that Dubai trip still on, or was it a joke? The Dubai
Yeah.
trip in 2025.
Everything I've said I do in terms of the group, still on. But I'm letting you know that my 2024 has not been as lucrative as I had planned. So I'm rebuilding essentially.
Oh.
But yeah, enjoy the rest of the day, guys, and see you tomorrow. Tomorrow is Friday. Let me just check the calendar. I think there's volatility. Yeah. We'll probably have a call tomorrow. It won't be a lot of trading, even though I will trade if I see something. I'd appreciate if you brought some questions and help me to gauge where the group is at. And then, we'll see. But yeah. See you tomorrow.
Thanks, Chris. Have a good day.
Thank you. Bye-bye.
Cheers.
Yeah, I think in terms of trader, I think it's fairly low risk for us per se, because really, I mean, the only downsides are you do have limitations in terms of payouts and whatnot. And obviously you've got to stick to a consistency schedule, but I don't think that that's so much of an issue, because it's like, if you're going in with the approach of kind of, not trying to like windfall the account, I don't think there's going to be a problem. Like, I think you'll be paid out, and I think I've not heard anyone with any issues. One of my friends had told me about it, and I had a look over the website and stuff, and it was yeah, I think I also know there's I want to say there was a trader on YouTube that I saw that was using them, and yeah, no issues. I think they also allow you to buy like multiple accounts, right?
Yeah. Just
Mhm.
like Apex kind of thing.
Just like Apex, yeah. Yeah, and you saw that person got paid $1 million off Apex.
That's crazy.
Smooth. Did you see it?
No, I didn't, but
A
that doesn't
smooth
surprise me.
million. Yeah, and then they obviously just like shut his account down, paid him out, and that was that. Yeah, Apex
Damn.
gives some of their traders the chance to trade live. But he didn't get the option. They just banned him, paid him out, banned him. So yes. So
Yeah,
one,
I was just asking because I didn't want it to be like another SFT thing, you know.
no, for sure. And to be fair with you, like, I think I mean, I think that whole situation just ran out of is that who you were with, SFT, before?
Yeah.
Man, shit's crazy. That was the company I used to work for.
Did you see it coming before the fact?
I did, and that's why I resigned. Precisely. I saw it coming, and not I'd say not 3 weeks later they went under, maybe a month, and then they lost like pretty much all of their businesses.
Did you say anything or did they just not care?
No, so I woke up when I resigned.
No, like I'm just. Did you say anything to them like, hey,
Oh yeah. Like I mean, I tried to. I had quite a lot in the way of trying to help and get things right, but it was just. Yeah, I think it was just too little, too late. Like there's just a point in time where, like the ship has sunk and it's like not sinking. And it was just like that realization that it's not sinking. It's already like we're done.
just
So
taking water?
yeah, it's just no. It's just yeah. It's kind of like save yourself, and that's kind of that's kind of what the attitude was. As bad as it sounds.
Yeah, well, I'm glad you got out of there fine.
Oh yeah, yeah, that shit was terrible. And then right after that, the work towards kind of trying to begin something in the fund space. That's kind of when all that kicked off. Okay, Dow, I see an upside draw to 42.6, and ES, I see a draw into 57.98, which over here with NASDAQ, Friday's trading. Just give me a minute because I didn't trade at all. I think I was on that cruise, so I've been offline for a whole week. I did look at price action one day when I got really, really weak internet, and then I saw some other people's charts, but overall, I again NASDAQ